1. SEC delays decision on Bitwise crypto ETFs. What it means for investors. 2. SEC delays decision on BlackRock Ethereum ETF payment in kind. 1. SEC delays decision on Bitwise crypto ETFs. What it means for investors. The SEC is dragging its feet yet again, and crypto investors are paying the price. In a move that's becoming all too familiar, the U.S. Securities and Exchange Commission has extended its decision deadline on whether to allow in-kind redemptions for Bitwise Bitcoin and Ethereum spot ETFs. This isn't just bureaucratic red tape. It's a delay that literally costs investors money through unnecessary tax implications and missed opportunities. But here's where it gets controversial. Is this caution or intentional obstruction? The SEC claims it needs more time to consider the proposed rule change and issues raised. As stated in their official filing dated Wednesday, they've pushed their decision window to the maximum allowed period, 45 days extendable to 90 days, keeping everyone in regulatory limbo. Let's unpack what's really at stake here. In-kind redemptions aren't just some technical detail. They're fundamental to how these ETFs would operate. Unlike cash redemptions where investors get dollars, in-kind allows direct exchange of ETF shares for the actual cryptocurrency, Bitcoin or Ethereum. Why does this matter? Tax implications. Selling assets for cash redemption triggers capital gains taxes immediately. But directly exchanging shares for crypto, that's a non-taxable event until you eventually sell the crypto. This difference could save investors thousands, yet the SEC keeps kicking the can down the road. This isn't an isolated incident. Earlier this month, Grayscale's attorneys blasted the SEC for violating statutory deadlines when the regulator abruptly halted approval of their digital large-cap ETF after initially greenlighting it. Grayscale called it a clear case of foot-dragging that conflicts with established procedures. But here's the twist. Despite these delays, the SEC's overall stance on crypto has undeniably shifted since Gary Gensler was replaced by Paul Atkins. Under the new Trump-appointed chair, the agency now calls tokenization and innovation to be encouraged rather than suppressed. Atkins himself declared the era of regulation through enforcement is over, promising transparent rules that foster new products. Yet actions speak louder than words. If the SEC truly supports innovation, why the perpetual delays? Are they being thorough or just buying time? The agency's U-turn on crypto leaves fundamental questions unanswered. Where do you stand? Is this careful oversight or regulatory obstruction? Should ETFs get special treatment? Sound off below. We're genuinely curious where our readers stand on this regulatory tug-of-war. 2. SEC delays decision on BlackRock Ethereum ETF payment in kind. In a move that's stirring up the financial sector, the Securities and Exchange Commission, SEC, has once again postponed its decision on whether to allow BlackRock to offer an Ethereum ETF with payment-in-kind options. This delay is a pivotal moment that could shape the future of cryptocurrency investments. But here's where it gets controversial. The implications of such a decision could either open up new avenues for investors or complicate the regulatory landscape even further. Meanwhile, in a significant career shift, Rich Newsom, a seasoned professional renowned for his role in transforming Mercer into a powerhouse in the global outsourced chief investment officer, OCIO market, has been recruited by Franklin Templeton. Newsom is set to lead a bold new OCIO initiative aimed at positioning Franklin Templeton as a major player in this competitive field. His extensive experience and strategic insight are expected to bring valuable momentum to their efforts. This strategic move by Franklin Templeton raises an interesting question. Can the infusion of proven leadership from other successful firms help a company break new ground in established markets? And this is the part most people miss. The potential for a reshaping of industry standards and practices through such high-profile transitions. What do you think? Does bringing in industry veterans guarantee new successes? Or does it sometimes complicate existing dynamics? Let's discuss in the comments below.